Welcome to Growing the Future Productions. And if you're just joining us, this is part 3 and the final session of our live conversation with Robert Andjelic, Canada's largest farmland owner, and what he believes is a coming capital squeeze in agriculture. Part 1, we focused on the macro risks and why the system is under pressure. Part 2 moved into Robert's framework and the concrete steps producers can be thinking about next. This session is entirely Q&A. What folks wanted to know from Robert, and we dig into the audience questions, into lender behavior, capital availability, real-world positioning. And if you value serious, long-form conversations like this, please like and subscribe and turn on your notifications so you do not miss future discussions. Now, let's get into it. Well, I think we're going to start getting to some audience questions here. How are you feeling, Robert? You good? You
fine? Yeah.
You look good.
Got my boxing gloves on, so let's go.
Whoa. Okay, settle down, champ. We're really going to get into it. No, I think that's some good debate. I'm going to start going through the chat here. And yeah, Robert and I are actually working on a bot of him that I'm going to be sharing with the world at some point in some capacity that answers questions in the framework of Robert Andjelic, so keep your eyes and ears open for that. Robert, when you talked to a version of yourself, what was your impression? Were you pretty smart and well-spoken?
Uncanny how they covered the points that I cover. Normally, I got about 100 different points I have to check off, or I don't do it on paper in my mind anyway. And hundreds of different questions. I don't really share that. It's part of the doing business and management of the land and purchase of the land.
Well, I'm working on that. I'm going to hopefully make that available to the world because actually, working with that kind of thinking partner is very productive from the questions that I...
But they definitely ask the relevant questions, no question.
Yeah. Kind of a no bullshit kind of chat GPT, hey? Got right to it. So let's start at the top here from the audience, and thank you so much. And I got to ask, Tori East has been putting her hand up since the beginning, so I just want to put it out there, Tori. I don't know if you want to come on the call or if you're just sort of hitting the hand up button, but I wanted to give you that chance. If you wanted to come on, let me know, or if you're just hitting that hand up button inadvertently, God bless you. Ken Modiak raised hand. Did you want to come on, Ken, or because I can make... I guess from here on in, if anybody wants to come on the call, Ken, I'm just trying to alphabetically get there because there's 500 on the call here. Ken Modiak. I'm gonna get Robert talking on a question here and look for your avatar here before we bring you on. So Robert, let's start at the top here with some questions from the crowd. Lyndon Maurer, does Robert still believe technical indicators do not apply to farmland values?
Absolutely.
Okay.
Technical indicators were meant for very liquid stock market assets, not farmland. Okay, take that example where I said Australia is going to have a drought. I don't care what those indicators say. If one of our major partners, not trading partners, but competitors, has a drought and they don't produce, I don't care what that indicator says. There's a crash or whatever. It's not going to crash because the supply and demand, somebody has to make it up. The other thing is, if China has a drought, China will not be able to produce as much going forward, mostly due to climate change and all the rest. Okay, they're not a major competitor in the market as far as the market's concerned, but they whatever their shortfall is, they have to make up in the market and buy more.
Okay, no, that's great.
Yeah, produce the same result.
I thought you were going to say, well, yeah, I expect a 50% retracement on the Fibonacci.
Well, there will be on the stock market. Are you talking?
No, I was joking about farmland, the Elliott wave, and the Fibonacci, and all that. I know you love that stuff.
It will crash by 50% or more in I'd say 26.
I know you've been telling me that, so that's crazy. So,
Well,
okay,
okay, they learned how to kick the can down the road so well that you can't judge something if the Fed steps in and greases the wheels right away. You know, but the longer this thing goes, the deeper the recession is going to be, and the longer it's going to last. No way
fair.
around.
Yeah. Ken Modiak, I'm going to allow you to talk. You had your hand up, so unmute your mic. You have a question or comment, Ken?
Yes, I've written it down as well. Am I on?
You're on. You're doing great, Ken. Thank you for coming on.
Okay, thank you. Robert, I appreciate all your comments. I've been a long time farmer. All my life I've farmed. I've done other things as well. But one thing that I'm missing is comments on Farm Credit Corporation as one of the largest ag creditors, and the fact that it is a subprime lender and it's not supervised by OSFI. So they don't have to live by the same ratios as any other FIs. How does that fit into the whole picture? Are there any comments, pointers on that? Also, in the 1980s, when there was a farm debt review board around, I worked with them for a number of years, readjusting farmers' financial situations on an individual basis from the last turn down in the economy in the early 80s. FCC was always the easiest creditor to get a deal from, again, because they didn't have the same rules. And with all due respect to, I guess it was Janice from Bank of Nova Scotia, we lived with this business of Toronto making the decisions and overruling farm debt decisions many times. They just, the representatives just couldn't make a deal. And also in this, how about the other creditors, the credit unions in the various provinces, big in Saskatchewan and Alberta and Manitoba, supervised by the provinces, not by OSFI. And on top of that, in Alberta, we have the Alberta Treasury Branch, which is supervised by the government of Alberta. Though they mimic and try to reflect OSFI standards, they still are somewhat different. And again, in my career, I have worked on the Credit Union Deposit Guarantee Corporation in Alberta, which supervised the credit unions. So bottom line is, how do all of these things fit into this picture? If you have a chance to refinance, should you aim your way to FCC and credit unions in the ATB as opposed to Toronto-run banks? And Robert, I would certainly love to hear your comments on this.
Well, you have to separate the federally controlled FCC or the provincially controlled credit unions. They still have a lot of oversight. What I'm talking in the shadow banking, where they don't have the oversight, and they have mostly free hand of doing what the heck they ever want. They usually handle loans that the banking system wouldn't touch. So I'd say that both credit unions, FCC, play a very critical role, an important role. And I think you'll agree that with time it has changed from its original goals, which was set up maybe just to help farmers, and now they have to meet the bottom line too, more so than before.
I just got a text message, Ken, you're being modest. Apparently you just authored a book about CWB history, and it's an excellent read. So, and you certainly were extremely well spoken on that call. So that is awesome. Thank you, Ken. Did that answer your question, Ken? Anything to follow up?
Well, I guess maybe a little more direct answer. You know, should we, as a safe haven, be, as we're doing this massive renewal, and we're right in the midst of this on our farm because we locked in a lot of low interest rates in 21, and they're all coming up in 26. You know, should we be angling and be first movers, angling towards get a deal with FCC or somebody like that? Because when the proverbial hits the fan, the people like FCC might not move as fast as others, and FCC, and I miss the provincial agencies like AFSC in Alberta. So anyway, that's sort of the train of thought I'm looking at.
That's perfect.
Thanks for your plug, Dan.
Hey, thanks for coming on. You get. Hopefully, you sell 500
have
books.
to decide, I'm up against the exact same thing. Which funds you do, what's the term that you choose for 3 year, 5 year, 10 year, or whatever. So you have to decide for yourself which lending institution has the right fit for you. Because you're right, they're not all the same fit, one size fits all.
Fair. Okay,
And I
Brett,
don't know much
I'm
about
putting you on
credit
here.
unions. I never dealt with a credit union yet. I did try dealing with FCC. They were okay initially, but their limit was at that time only 60 million. Today it's increased from what I understand.
Right.
And that's another aspect is all the all lenders will you're going to outgrow any one lender. When you start off with let's say $1 million to two, and then it could be approved internally, and then goes to the next step, and eventually you outgrow them because they don't give you enough credit for what you pledged, the collateral that you pledged.
Ken, we just had somebody buy your book, so send me the dividend. I thought we had Brett, but he kind of I'm not sure. Sorry if I missed anybody here, but Lars, I'm going to allow you to talk. You had your hand raised, hopefully not inadvertently. Go ahead, Lars.
Okay. My question actually was I put on the Q&A, but hadn't brought or dealt with it. I wanted to see what Robert's thoughts were. Historically, there's really been some great buying opportunities in situations like this in the next few years, if you got the cash and the patience and the wherewithal to survive. So what does Robert think about that? Is he going to put more money into farmland? And does he have any thoughts on the best areas in the prairies to be buying in?
Ooh. Whoa. Good
Well,
one.
I don't have any thoughts as to the best areas because right now we're running the course of the end of the dry cycle. So that's the Gleisberg cycle. It kind of peaked in July last year, and it's an 80, 90-year cycle. The last one was, of course, going back was the dirty 30s, 30. So now we're drifting into the wetter cycle, but it's not an abrupt drop from one to the other. It's like you can think of it like springtime. Springtime, you can have winter weather or you can have summer weather. So it'll be kind of drifting in and out, but the further it goes, the more it's going to go into the wetter cycle. So another 5 years or so, and then 10 will be into the wet cycle more and more. So there's hope for the West in that just like 15 years back, when the East was too wet, the West was just about perfect. So that we're drifting towards that.
Well, I'll make Dallas Monio happy. He's on the call. That's great news. Hopefully that comes true. I lowered everybody's attendees' hands here just to do a reset, and please put up your hand. I want to make sure you're actually wanting to come on. But I'm going to keep answering everybody's questions, and I really enjoy the interaction. I think that's excellent. Ken Sabatier is asking, curious on the interest and foreign investors purchasing farmland, either directly or via proxies. Is this a real concern? And if so, how does this impact land values?
It's bullshit. Okay. Plain simple. Okay. There's so much coffee talk about that crap. I'm already, there's no truth to it whatsoever because the odd one may kind of fall in through the cracks, but not many. Because I've been investigated by that, the source of funds and everything else, and I know what they go through. You know, they're very, very thorough.
Why is that such a persistent meme? I mean, it comes up almost immediately, all of the time.
What are you talking about?
Well, our topic that foreign investors are buying up farmland on the prairies.
Well, I don't know. It's that's the perception in Canada and U.S. for that matter. Chinese are buying. I have run into only a few Chinese that sold occasionally, but they weren't Chinese. They were Chinese living in Vancouver, Canadian Chinese.
Mm-hmm.
So they're no different than you and I. They're Canadian citizens. So that is definitely not true. There is no competition from foreigners. There are provinces that are open to foreign investments, being Ontario and BC to a large degree. But they're the only two provinces that are open. The other ones have very strict regulations for farmland ownership.
Ken, you had another comment?
Yes, and thank you for taking it again. Again, Robert's comments, if we may, back in the Farm Debt Review Board days and looking defensively, we've always found that when you had more than one major creditor as a farmer, you were able to get a better deal, because if all your eggs were in one basket, that one institution drove the bus. If you could getting more than two gets complicated, but at least two, maybe three, you'll find the three of them can't agree on how to deal with you. So you can usually come down the middle. And I know on our farm, I'll say our loan portfolio for farmland and our farm is split between FCC and ATB Financial, again, because I don't trust the Toronto banks. And oftentimes you can play them one against the other. And this is purely from a microeconomic farmer survival level.
Are you talking syndicated loans, or are you talking just mortgages or loans with different banks, but let's say one for farmland, one for equipment, the third one for, let's say, inputs?
I'm going to allow him to talk one more time. Ken?
There we are. Sorry. No, I'm not talking syndicated loans. We're not that large. We're just basically having some of our loan portfolio with one FI, some with another. And they both see our pictures and everything, and they know that we have a relationship with another strong FI. So I think that gives us a little more leverage in our negotiations.
I agree with that. I agree with that for a reason that you never know what the other bank's exposure is elsewhere. They got offices of interest in the U.S. and a lot of different places, and you never know what their book is. So you never know where they're going, when and if they're going to be pinched, and in which area, and so on. So if you have two lenders, that I think that's ideal. Like you said, going three or more, it makes it far too complicated.
Ken, it sounds like you need to come to Convergence, get yourself a ticket, and come talk to Robert in person. And Janice, you're going to be there too. Did you want to jump in on this, Janice? Because you're the bank in the room. Why don't you tackle that, please?
Sure, happy to. I mean, I think that the situation, it just really depends on your situation. It depends on the size of your facility. It can be more expensive to have multiple lenders. It's an option that is not necessarily available to smaller and mid-sized farms. Everybody has to look at their own situation and figure out what works best for them. And a lender's obligation is to provide you with the most appealing options that we in our conversations with you and understanding your business, or another FI in their conversations, are understanding your business and making recommendations as far as like what might be the right structure. But just generally speaking, smaller operations probably it makes more sense to have one lender, and in fact that might be something that you end up doing. So I guess everybody needs to look at their own situation and figure out what works best for them. I would also just like to throw into the chat here, I'm not in Toronto.
Fair. She's not in Toronto, and she had a farm. We were talking about it earlier. Yes. Robert was we're going back and forth on the nature of her farm. So, and I wanted to allude to some conversation into the chat here. Robert, we had someone say, are there really any bankers out there that fight for their clients' needs or situations? And you know what? We had a number of people jump in saying lots of local bankers fight for their good, well-prepared, fine clients. And we had another person say, if your banker isn't fighting for your needs and accommodating different situations, get a new partner, get a new banker. And then surely that's how we see, if you're in farming, all of your suppliers, you should have a relationship where they are your partners, because that will get you ahead on every front, whether it's lending, the equipment side of things, your inputs, your agronomy. Partnerships yield, in my humble opinion. Is that fair, Robert?
Absolutely. There is no question that they go to bat for you, but you have to give him the tools, or give him or her the tools to go bat for you. If you don't give him the financial statement, proper explanations, and of how you and the numbers, how you plan to achieve these goals, and actually achieve them, and be usually like, as far as I like the way I do it, I'm fairly conservative on it, and I always overachieve those goals, almost in all fields, going back 50 years. So they'll go back to bat for you, no question, if you give them the tools and if you communicate.
That's your whole 3-point plan.
And
talk
the
to your
other
banker,
thing
figure out how to talk to your banker.
There's also really good bankers out east. They may not understand agriculture or know one piece of equipment from another, but they know the concept of what its future is. Once I sit down with them, start explaining to them everything. Oh yeah, I never thought of that. Yeah, I get a lot of that.
We had a banker that went to bat for the farm.
And I can tell that they bought into it very heavy, because they're looking into it very seriously. Yes, Scotia Bank's very good, but there's others that are definitely on their heels, right?
We had a banker that is no longer with us, unfortunately, but helped us get our business started at Aberhart Ag, and was there for the farm a number of times, where the farm would not be there anymore if not for them. And let's face it, our whole civilization is predicated upon things like oil and banking and all that good stuff. It's how we get around in the universe. So let's keep it rolling. I want to get some other folks on the call. Ken, you're totally welcome to come to Convergence and continue putting in the chat, but I'm going to move on from that conversation. Calvin Gavilan is asking, why are farmers' portfolio not updated in value like other investments?
Well, David, that's up to you as the operator. You do your, if you got land, you do your appraisal, or put a business plan together. It's updated as much as you want it to be.
Okay. I got a comment here. Thanks, Robert, for doing this. Education is key. So we're getting some appreciation, and I want to say thank you again. Does Robert think that the OSFI has a sophistication to look at agriculture separately from commercial real estate? It's a nerve for you, hey?
They will. I think they look at the bank as a unit. Like, where's their exposure? What's the debt limit? What is the default rate? And everything else. So it's, I don't think they have the ability to do that.
Someone was asking for clarification. I don't want to dwell too much on this. I think you've made your point, but are you projecting big banks will begin to place a squeeze on ag in order to make up for losses in the rest of the portfolio, given where we're at in the ag? Yeah.
No, they see agriculture as an alternative, much like as Janice had stated. And they say virtually out of the 20 that I met with, I'd say 18, 19 see agriculture as an alternative. Now, agriculture is not a big enough field. Like, we don't have the commercial real estate like the commercial real estate has, like the REITs and all kinds of different investment vehicles. It's just too small for all that. It's not concentrated enough yet.
We had someone make a comment about Bill Gates feeding the world with algae chicken, but it does raise the specter of, do you see Beyond Meats or alternative methods of producing food, or something else, Star Trek coming up here that's going to disrupt the fundamental inherent value of farmland, which captures the sun and makes food on a large scale on planet Earth?
Potential, everything is possible, but the immediate future, no.
Have you had a Beyond Burger?
I see. I tried. I think I tried it once a long time ago, but that's a very small percentage of use of the plant-based proteins. Most of the
Right.
plant-based proteins go into a lot of different things that you eat it every day. You don't even know it. Fortified bread, everything, all kinds of different foods. The biggest use is
Right.
even in baby formulas, you name it. Plant-based proteins are in there. That's the kind of a future. So they can't get around it, uh, and they can't create it out of nothing, out of midair.
But that's very positive for a lot of the things that, for example, Saskatchewan would be producing.
Absolutely.
A huge
Yeah.
opportunity.
Yeah, we have to forget about that. What you said. What was that burger? That
Beyond Burger, I don't think their stock's done
that's
very
a
well
very
either.
small percentage.
Uh-huh.
But everybody thinks it's the total. No, it isn't.
No, it's just kind of what sticks in our mind, I think, Robert. So we had a comment here. It's not only where we're headed, but where we already are. Rising costs of 100% of everything we need to operate and survive is already untouchable for too many, regardless of what you do. I mean, yeah, we've had a bit of inflation. You said those inflation numbers aren't being tracked like they were in the 70s. Obviously, they've excluded some important things, I think, like energy and
Well,
food.
I do that. I crunch out my own numbers. I
Mhm.
use the same formula that the U.S. used to use in the 1970s.
Mhm.
And it's a very different formula than what they use today.
Mhm.
Okay, when you punch in those numbers, according to the 1970s formula, you come up with anywhere from high single digit inflation to double digit inflation. No
Well,
two.
just do the math at the grocery store.
Well, again, go back to the consumer. Consumers are key. What do you have to do? All this fantasizing and all this theory and everything else. When you got the darn consumer right there, ask any consumer, he'll tell you much quicker than all those central, not the Fed has what, 3, 4, 500 economists, and they never guessed one single recession ahead of time. Maybe they did. I just don't want to panic. Maybe they just don't want to panic the public. But
Well, I hope some of them are on the call today, Robert, because that would be helpful. Georgina, thank you for joining. Much of building resistance for ag has been done through the ag industry itself, through diversification, managing cash flow and market volatility, and historically leveraging government support. Canadian ag flourish without government support, of which that capacity and appetite is diminishing? Are the feds in on this game?
well, you have to look at again global picture. If other countries are subsidizing, then you have to kind of play the game. Otherwise, it's not a level playing field. Okay, if you remove subsidy totally around the world, we can outcompete anybody, and I don't give a hell where you're at. You can be anywhere in the world, and we can beat them. We have some of the most efficient, best producers in the world.
Absolutely. No, that's a great sentiment. Mark Bertrude is asking, does Robert or any other panelists have any thoughts on Forex, specifically CAD USD or USD Won in the next 3 to 5 years?
I know I say currencies back.
He's not biting. You'll have to buy the bot. You have to buy the bot. Charlie Westfall's wondering wonder what Robert's view is on the ever expanding Brazilian crop area as it relates to prices.
Well, Brazil's a different can of worms for us in that their soil is virtually void of nutrients. Okay, without nutrients, they can't produce a darn thing. We can still produce even if we don't put in the proper nutrients. Your yields won't be up there, but Brazil can't. That's soil is void. So as far as yes, they can beat us, but again, who did they compete against? They don't compete against Canada. And the grains like the wheat, oats, barley, and canola, they can't grow that. They compete against U.S. soybeans, corn, and soybeans mostly.
Plus, Canadians are always on time. It's a different pace of life down there. I hear in Brazil, everybody's kind of. Maybe we should be more relaxed, Robert. Maybe we should just be more chill.
I am. I don't know about you, but
Oh, well, you are the chillest guy I've met for sure. Devron Donald Wayne is asking the paper trading mechanisms that have been suppressing the price of gold and silver. It's similar to what's been happening in the CFTC for ag, commodity, grain, and beef.
Yeah. Going back to gold and silver, that's the reason I got out of it. What was that? 15 years ago? Because I found every time, like I could be right with my choices, and yet if the price of gold goes up too much, China will dump a bunch on the market, depress the price, and then start buying at the lower price. And I've seen that often, like constantly. That's the reason I got out of it, because, like as I said, you're right when you're in your analysis, but you're wrong on the financial side. Uh, and China has been hoarding gold for a hell of a long time. And their gold reserves are far, far higher than anybody knows of. So now whether they can peg
China?
their, yes,
China's gold reserves are far, far higher.
yes. China, most people don't know this, but China is the #1 gold producer in the world.
Hmm. Oh boy. Okay, well, I'm going to say, Robert, you called me last night and you said if we need to take a bio break at the 2-hour mark, and I know this is crazy, but this is a pretty special event. We still have 450 people on the call, and there's a lot of people that couldn't get in because I guess I had the limit set too low. I thought it was up to 1,000. My apologies. But so let's take a few more questions at the top of the hour, and I recognize people have work to get to and a bunch of stuff, but for whoever wants to stay, I think we'll take a 10-minute bio break. Just cool off our neurons here, park our brains for a second, 10 minutes here, and come back. And I want to try and get to the rest of the questions because Robert isn't going to make a full-time career being on the Growing the Future podcast, even though, we're paying him super handsomely. Hey, Robert, that's a big check you're getting to be on here today.
From what I remember, it's.
Yeah. Janice wanted to make a comment. I know she's got to jump at the top of the hour.
Yeah, just quickly wanted to say thank you very much. Unfortunately, I do have to jump at the top. So this has been a great conversation, and look forward to seeing everybody at Convergence. So thank you very much for the opportunity.
Oh man, that warms my heart. Well, thank you, Janice. And you know what? Let's take a break here. Let's just take 10 here, and then we'll start questions again at the top of the hour. Robert, does that sound good? Anybody else that needs to jump? Yeah, let's just take 10 here, and we'll come back. We'll try and get to everybody's questions, but I need a break. Janice, thanks for coming. The sponsors, if you can stay, that's great. If not, that's understandable. If people are going to get off the call, that's fine. But we do have more to cover, so I want to get it all as much as we can today. Thank you. I'll see you at the top of the hour in 10 minutes, all right? We had another question here from Matt Gosling, who had to leave the call for a client meeting here, but we're going to see him at Convergence. He said, it's hard to ignore the influence of cryptocurrencies on the market. Where do you see crypto and AI on global market performance?
I'm not into crypto. The way I look at it, gold has been used since the Roman times. Oh, even before that, going back to the Egyptians and so on. But I don't know if it was a currency back then, but it was definitely a currency during Roman times. And so humans have trusted gold for all those years. And I don't know what the value of the crypto is. As far as AI, I think it's definitely the future. There's no question about that. Is you're talking about AI like ChatGPT and the rest?
Yeah, I think he's asking in general, like, what do you see crypto and AI on global market performance? Like, what's going to be the impact of crypto and AI?
Well, I like AI where it's going with all this weed recognition, and when it sprays the only those weeds, and I like where it's going in agriculture and well all around you every day stuff.
Yeah, it just permeates
Crypto,
your.
I'm not familiar with. I really can't comment other than the fact I did compare it to gold, and I chose gold.
Right. And we were talking, somebody had asked about to what degree, crypto could back the fiat currencies. But again, you made the point. I mean, there's nothing really to Bitcoin other than people's belief in agreeing what it's worth, right?
Well, your faith in fiat currency is just that. You got faith in it, it's worth X amount. You don't, toilet paper is worth more. Can do
Well, we had a flight to safety with the toilet paper at the beginning of COVID, did we not?
well, yeah, it's recognize its true value. Go ahead.
Yeah. Any insight into what increase there is in farmland loans being switched to interest only or re-amortized longer?
Interest only they'll do, but again, going back to Nova Scotia Bank, Janice, she didn't quite agree with it, but they want much lower loan to value. I have banks that, well, we got offers from banks, but they wanted 20% loan to value or less to do interest only loan.
Yeah, Tim, you had some data on that. I think I could see by your facial expression. Did you want to jump in on that, or? Oh, you're on mute there. Yep.
Yeah. No, I was just thinking that's a super low kind of value, but that's been our experience. Just working with investors over time is that it's challenging to kind of get a higher loan to value kind of ratio out of the bank. So it's really interesting to hear from you right now that they're even ratcheting down from what I consider to be a low value to begin with.
Well, we're at 24, and if they want us to ratchet it down to 20.
Yeah.
Adrian Liebart is asking a really interesting question here. Robert, would one of the red flags be the fact that land rent is trying to cover costs of borrowing and it's not penciling out? This would be right up your alley.
I never did pencil out, okay? It can go back to as far as you want. It never did pencil out. But
land never made sense.
This is not anomaly true only to farmland. When I used to do warehouse office buildings, let's say commercial industrial buildings, a new building I built, let's say the old ones were built at $50 a square foot, the new ones at 80. Those are old numbers, by the way. They're in the hundreds now, but these are fact numbers. 80, I'd get the same rent, maybe a little bit more than the older ones. So it didn't cash flow for 3 to 5 years. And that's the same thing is true for farmland. Like when I started buying, it was actually a better return. I think in 15 years ago, I used to get about 5% cap rate. And then now it's dwindled down to 3 or 4 or less.
Yeah.
So I never did. A lot of things don't cash flow properly right out of the gate.
Interesting. Craig McPhee is asking, does your crystal ball see restricted farmland ownership provinces like Saskatchewan and like Manitoba loosening restrictions for foreign ownership in the future?
If they truly want to grow, you need capital. That's like what this whole conversation is about.
Mm.
And without capital, you can, let me put it this way. You're wherever you're at now, so let's say there's a gold mine underneath you. You could just starve to death up on top there, but if you without cash or no income, but if you start tapping into that gold mine and start working it, that's when its value will come out. And that's the same thing with farmland and any capital investment. You have to put it to work.
Yeah, it's a great point. Great point. Someone mentioned that they got their orange trees ordered. I suspect that's something about climate, changing weather or something like that. Comments about our friends in the U.S. here. Okay, so we have a neighbor to the south that we have the longest border with, and we're elbows deep, elbows up or elbows deep, in a not so good situation with. That needs to be fixed, or else it will continue to worsen our overall situation. Other comments: we definitely need to fix our U.S. relationships. 3/4 of our exports go to the U.S. Turning up our nose to them is asinine in the face of deglobalization. Do you want to comment on a relationship with the Americans?
Where we and the rest of the countries that tariffs affected would collateral damage. The true battle, is between U.S. and China. And that goes back to the dominance and control of the hemisphere, wherever their influence is. China will throw every hurdle it can, economically, financially, and every other way, at U.S., trying to make them stumble, and vice versa for U.S. China. So the true battle is between those two, and that's not going to end anytime soon. And regardless of what the stock markets, the guys say, oh, it's going to end in a month or two or a year. No, that'll go on 20, 30 years. And if you go back in history, that's always happens throughout the changing of the guard, like the Spanish Empire, the Portuguese, the French, the British, British, the last one.
Yeah.
They always end up in war, ultimately, when all else fails. This one may be a little different. It may be a cyber war or what, but a war nonetheless. But we are in a trade war, or they are in a trade war. That's why
Einstein said they'll throw rocks on the other side in World War III. You also said China is going to be going after Taiwan.
Yes, definitely.
So there you have it, folks.
Yeah, China definitely will go after Taiwan, and who knows? There may be even agreement. Like this is just kind of off the cuff the theory, like agreement even right now that U.S. gets Venezuela, or maybe something else, Greenland, and China gets Taiwan, and divvy up the.
It seems like the chips are in motion in the game of Risk in the world, is my impression, for sure. And you won't find out who's been moving the chips around and how until it's evident on the board here. So interesting times. Devron is asking, I'm interested in hearing his opinion about weather. As a voluntary carbon credit project developer, I can use remote sensing to track weather pattern disruption over the decades and directly link it to soil carbon reductions, wet loss and wetland loss, grassland forest reduction. Can also track weather pattern restoration when soil and biome carbon increases. Carbon dioxide in the air is plant food. Carbon is our soils and biomes is a critical mineral. Where are you at on this whole carbon thing?
Well, during the highest vegetation period in the history in the world, it was the highest carbon number. So carbon is an absolute necessity. There's no question about that. I don't think humans are as much to blame as the far left or that agenda says we are. I think this is climate change, and that's been occurring and going on for millions of years and longer. And it's just part of Earth's changing, constantly changing uh, uh,
Weather patterns and environment and all that, for sure. Are you going to get paid for carbon credits on your land?
Well, I don't know if it comes to that, and if I think like even in your past podcast, the one we did 2 years ago, I said that the momentum's going to be slowed down for carbon and carbon credits and green movement. because of the recession. People are going to be more concerned about putting food on the table than worrying about carbon or staying green.
Yeah, I think a lot of that's gone out of the window here as concerns have changed.
Yeah.
People got the
Yeah, well, we
attention span of
addressed
a
that
goldfish.
in the previous podcast,
Yeah.
2 years ago.
Great question here. Finance comments so far in LTV on real estates. What's your thoughts on operating credit crop input financing available?
I don't know much about crop and what's available with crop inputs and so on. I do know
Operating
one
lines.
thing, though, that I forgot to mention is because the farms are getting larger and larger. Let's say one's 30,000 acres. Okay, if the old ones were 1,000, let's say, so you needed 30 people to run that. So the input guys would have to visit 30 people. If he loses this one contract with a 30,000, he loses big time. So they're much more flexible. And I'm hearing that a lot of them are getting big breaks, like 20, 25% reduction in inputs, like whether it be, I don't know, whether it's seed or chemicals or fertilizer or whatever, but the inputs are being a lot more flexible with pricing.
Interesting. Okay, so one caveat with ag real estate versus residential lending. Ag farmland pays higher interest rates on property that can easily be trashed or destroyed, yet ag is the higher risk. I guess he's wondering why ag would be a higher risk if I'm not sure I know what. Do you understand the question, Robert?
No, I don't understand ag being higher risk. Ag is the lowest risk.
Yeah. Jonathan, if you can clarify that.
The only thing is you can't fill a banker's loan book with ag. It's not big enough industry.
Mm-hmm.
You know, we think it's big, but it's minuscule compared to commercial real estate, which is the largest industry. Well, actually, that's not true. The derivative market is larger than even commercial real estate, but in a notional sense, not in the true asset value.
Yeah. Okay. Casey Dean is asking, do you recommend a young first-generation farmer continues to push finances to obtain land or slow down and balance the balance sheet?
I'd say balance the balance sheet. If you don't do that, you're not going to be in business to take advantage of the land. You have to,
Casey, if you're a young farmer,
you run your business first. Like I'm always a little baffled, why does a farmer have to own land? I don't land if I can, let's say if I covered my next year's inputs, they were paid up front. And then if I had cash left over, $1 million, then I'd put it towards land, no question. Because land is a hell of an investment. But your number one thing is to run your business first. And if you pay your next year's inputs, or if you have cash enough for next year's inputs, you're not going to have a gun to your head come December, January, or whenever they want you to pay that, may possibly in the worst priced market for ag products.
Yeah, your fundamental argument is if your back is up against the wall, you're going to make some terrible decisions financially.
Correct.
Keenan Amy, my friend. Oh, I just lost your question there. Sorry. There's a lot here. Sorry. Keenan Amy, do you see a divergence in farmland value and rental rates, as in farmland values keep climbing while rent lowers because the rent values don't cash flow at higher percentages of value? I think
neither one cash flows. Okay.
Never makes sense, you said.
They talk about production side not cash flowing. I don't cash flow either initially. How can I buy land at $5,000 an acre and have a cap rate of 3% and then have a mortgage at 6%? Doesn't make sense. I'm 3% underwater. So now cash flow, and that's why my point is it takes a minimum 3, 5 or more years to cash flow properly. So that I'm depending on my old purchases where I bought at $500 an acre and the rent is $100. So those are carrying the new purchases if I decide to go, but I haven't been really active, like what, 6 years now? Buy the odd here, there, but
Yeah.
nothing like I used to buy 40, 50,000 acres per year when I initially started.
Yeah. What are you doing now?
Well, I buy it only if all the numbers jive.
And they don't
They're
jive as much.
elected. No, you can't buy because how can you buy if it's listed? All the realtors will agree. They list it 1, 2. If it's 3%, then they expect it to be sold in a day or two.
Any comments from the realtors on the call? We'll
Yeah.
jump in on that if you wanted.
Yeah, I mean it's tough for investors like over the last little while to kind of compete with producers because really producers have driven
Right.
everything, right? Just so many of them and so much demand, right? And so and then the higher the values go, the smaller the returns that you get too. So that's kind of also decreasing investor interest a bit. So it's it's quite interesting actually.
Good comments, Tim. Anybody else before we move on? Harry?
I was just going to say, the rates that most banks, I think, right now are lending are in that, it depends on the size of your loan portfolio and whatnot, but let's have a 4 in front of it, round 4, some are in the high 3s, but 4, 4.5 is pretty common, I think. Just correct me if you guys are, if you think I'm wrong. So, a 3 cap rate would still leave a deficit, of course, but it wouldn't be a 6%. Did I hear you correct, Robert? You mentioned 6%, so that would be a full 3% gap. So,
Depends the kind of mortgage you're looking at. If you're looking at swaps, they're the most common. But if you're looking at a 10-year fixed, it's 6% or 5 plus. Okay, if you look, that depends on your term. I don't with the way I see the economy going. First of all, interest rates going down and maybe going like that for a year or two, and then picking up. I want to miss that up cycle. I can't afford to renew at 10, 12% or more.
yeah.
So I go long. It depends on your term and your the rest of it.
Sure.
And if you don't want swaps are the most competitive, yes.
Right. Yeah. Good.
But I don't trust the swaps because you have to renew every time, and there's some real potential problems there, and to be offside if interest rates jump up.
Yeah, there was a question here. Do you use interest rate swaps?
In a normal economy, yes, I would. I don't see any problem. But what I see coming down the pipe, or what I think is coming, well, I'm pretty sure, is coming. I don't want swaps because I don't want to be tied into renewal at the wrong time. Because within that time frame, 3 to 5 years, I see it at interest rates going into double digits.
Great conversation. Devon mentioned there's 2 books by Sam Cooper discussing Chinese involvement in Canada's economy. Neil Yakubowski, thoughts on inflation / hyperinflation through downturn as dollar potentially devalues and capitalizing on that opportunity.
That's very hard because it's hard to time.
It's hard to time. Timing's out. Yeah, timing's the issue.
Timing is everything, and but even timing, you could be right with your analysis, but if the Fed and if they do different things, they'll throw you offside a year. So yeah, so in the end of that year, they'll tell you, yeah, you were right all along, but you lost your pants in between.
Okay, but Robert, I just need you to tell me when the stock market's going down by 50%. That's all I ask of you. I don't think that's unreasonable.
When they stop kicking the can down the road, when maybe somebody put a steel in that can, and
ouch. Well, I know you're going to be calling me when it does, but call me before it does, okay? Like, help a guy out.
Happened so suddenly that just the same thing like when I was I started calling for 2008 recession in 2006.
Yeah, that's
Because for
crazy.
us to put all that big portfolio together for sale and everything took months and months. And I ultimately sold in 2007. But it was the same thing then. You can equate it to today. Uh, I remember I went for breakfast with a competitor, and he knew I got ready. I sold a bunch of buildings, got into cash and everything else, got ready for 20. That was the 1990s recession. And a whole bunch of good news came out, just like today. Markets hitting top, and everything's booming and everything. And he says to me, all dressed up and no place to go. Same competitor was bankrupt within 8 months.
Huh?
That's how fast things turned around right after. So, in other words, it goes, and then it'll come to the edge of the cliff and straight down. There won't be no little down movements, and it'll be a crash.
We're gonna start calling you the Big Short.
Well, I won't short that. So I lost my pants once doing that. That's the only place I lost some money in.
Well, I was just gonna say I was glad that you had some pants on for the Zoom call, and everybody wears Zoom pants in the Zoom world now, and it's good to see you had your pants on when you're walking away there.
Because with short, you have to have timing, and timing again, you can be correct with your analysis, but somebody else's actions, like the Fed and the rest, can kick the can further down the road, and then you're wrong in that time frame, but you're right in your analysis. So at the end, you get a certificate saying yes, you were right, but you lost.
Yeah, you can be right around. You can be the market can be wrong about or right about your assessment longer than you can remain insolvent or something like that. You guys know what I'm saying.
Yeah.
Will farm profitability limit the entrance of new, well-educated farmers that are needed for the health of our ag industry?
No, I don't think so. I think as we go, I think commodity prices will increase and increase. I'm full anticipating that there will be a time with this climate change and everything else where the droughts are going to be far more severe. And the ones that produce, of course, when you limit your production, the ones that do produce get bonuses payments for it. The prices go much higher.
Robert,
So
you should have said that at the beginning. People had to wait 2.5 hours to hear you say commodities are going up, and that's just what the only thing farmers want to know is their canola going to be worth more than it is right now?
Again, like shorting the market, when's it going to crash?
Yeah.
We don't know. Like it is dependent on other countries and their production level and yields and everything else, and the weather, as always. But the fact that it's going to happen, no question.
Kim Levy's asking, Robert, are you willing to share what your transition strategy is with all your land assets?
I don't have a transition. I just improve the land. I have no intention to sell. And if I do sell, I'll give my tenants the right of first refusal. They'll be the first ones in line.
Really?
Yeah.
I think she's meaning like, what's your succession plan? Maybe is that, or
Well, that's one of the things it is, because I'm actually the problem for the company because I keep on buying, diluting the cap rate. So if I buy at the 3 cap and the rest of the portfolio is 10, 12 or whatever, I dilute that 10, 12 cap because of the low one. So if I'm removed and they just manage the properties, they're much better off.
Cole McMahon is asking, it sounds like Robert is anticipating a continued appreciation in farmland values. Does the argument for diversification change if the rate of farmland value growth levels off? I don't think you're going to change your mind, are you?
Well, no, I would have done it a long time ago, not a long time ago, a couple of years ago when all the options were open. Right now, I see farmland is the best investment, bar none. Never
Yeah.
mind gold and even gold. It'll beat gold mainly. And I'm not. Oh, by the way, I should clarify that when I say gold and silver, I'm not talking ETFs, electronically traded funds,
Yeah.
where you get a certificate. I'm talking about physical gold. You have to get physical gold, physical silver.
Yeah.
That's the ones.
Why can't I buy an ETF, Robert?
Well, ETFs, they got 5, 10 times more certificates outstanding than they're holding gold. If you go to redeem it, and the people ahead of you redeemed already, and they say, "Well, you're out of luck. You got the damn certificate." You say you got
Isn't
it.
that our entire fractional banking system times 20?
Yes, it is, but that's why we're going to be in problems that I'm anticipating
Yeah.
because of the fractional banking system.
The horse is out of that barn. Carney's negotiating carbon tax at $135 per metric ton at 3 to 10 acres per metric ton of storage. Why has our industry accepted the regulation that excludes our storage? Best off-farm income available. So I guess back to the carbon chat, but you're just waiting for a check, right kind of check, one day on carbon.
No, I'm not holding my breath on that. The governments have to be a lot more solvent than they are today to participate in that. And it's the WEF talk in there, World Economic Forum crap.
Well, yeah, and it's almost, if we got World War III and the world's going to hell in a handbasket, I don't know if anybody's going to be worried about carbon credits, I guess, as such, but I don't know. I mean, maybe I'm simplifying things, but Conrad Neufeld's asking.
There may be, like, if economy is booming and everything, yes, we'll test that again. We'll go revisit it again.
It's kind of a luxury, isn't it, to be worried about these things?
When you're worried about putting food on the table,
Yeah.
and what the hell are you going to be worried about the green stuff and even organic and stuff that's going to be curtailed to a large degree.
You're going to be looking for a carbon sandwich.
Yeah.
You mentioned being prepared for the upcoming economic downturn. As a next generation farmer, what's the best way to prepare, be aggressive, and buy as much land as we can afford in the current market, or play more conservatively? You already asked that. You answer that question. Get your balance sheet right. Regarding the comment, anything else on that, Robert?
Farmland is a damn good investment. Okay, there's no way getting around that. It's just how you utilize your capital and where do you get the biggest bang for your buck? Do you get it by paying off the next year's input costs, or do you get it by investing in farmland, or whichever one? The trouble is with farmland, you have to sell it. Yes, on paper, on book value, you may be worth X amount on paper, but you have to sell it in order to realize the profit. And then you're up against, farmers, producers, they get a break that investors don't. You can replace the farmland down the road. And I think, I don't know how many years you got, or a year or whatever, to replace that. I don't. If I sell it, it's pure capital gains, finished.
Yeah. Yeah. There's a little bit harder for taxes. We've had some comments here about the double-digit inflation that you were talking about. Jesse Hewling is asking regarding the comment by Roger about interest rates being in the double digits in 3 to 5 years, or Robert, sorry. Let's say you had a bunch of money coming up for renewal in 2026, 28. What would you do? Would you lock in everything for as long as possible, 7 to 10 years?
Well, I'll tell you what I did. I locked in a 10-year fixed, no swaps. 10-year fixed mortgage, conventional mortgage.
Yep.
And that's all and I've analyzed it every which way, 100 different ways. So through swaps, through different terms, 2-year, 3-year, 5-year, 10, and so on.
As an investor, today's prices in Saskatchewan, do you view farmland as a capital preservation asset, a growth asset, or primarily an inflation hedge? How has that opinion shifted over time?
It really hasn't. farmland has always been an inflation hedge and correlated closely to gold. And farmland actually performs in even opposite economies, such as inflation or deflation, which is quite the opposite, of course. And the farmland has performed quite well. I don't think there's a better asset class if you can get through the period of until it cash flows.
Jeff is sharing, Jeff Ekstrand is sharing, understanding that there's different soil types, location, and competition. What is the highest dry land purchase price you're aware of not influenced by urban expansion or development?
About 10,000 an acre.
10,000.
That's mostly
Alberta or Manitoba?
irrigation districts.
I think he was saying no irrigation, but.
Oh, no irrigation. But there's still 10,000. There's our
dry land. Yeah, he said dry land. So
yeah,
probably 10, eh?
Yeah, but that's very, very high, of course. But Saskatchewan still, when you compare it to Manitoba or Alberta, still has the lowest priced equal production land. Like I said before, 50 bushels in Manitoba, 50 bushels. If you can grow 50 bushels in Saskatchewan, 50 bushels in Alberta, price should be similar, save for maybe transportation costs. But Saskatchewan is still underpriced.
It's so true. Yeah, I remember leaving home and surprised working in Manitoba, the value of lands that were producing relatively the same, but there's a lot of factors there. So Tennille Merton is asking, in regards to current markets, what does the future hold for growing commodities? We might be the most efficient and possibly the most nutritious, not that we currently measure that in the market, which we should be, but with many countries looking to grow local or find cheaper producers, how will Canadian producers, what do we need to do to stay competitive? How will we stay competitive?
Well, number one, be as efficient as you can. And you can be efficient with 90-foot cedars and going around all the sloughs and bluffs and everything else. You have to clear that land and make the equipment produce to its maximum efficiency. As far as producers are concerned, what we should grow, I always advocated that well, this is where the government has a role. I usually hate you involve the government in any role, but if they can do studies of what is a let's say country like India, the rising population, Indonesia, China too, but China is in a little bit different class because mainly because of their rivalry with U.S. and they deem us to be close to U.S. or same as U.S. Anyway, any one of those countries, what did they use? What kind of products do they use, or the foods that they use that we can grow here? And I guarantee you, you'll find some that we don't grow at all, but are big consumption numbers in India, Indonesia, and all those.
Interesting, yeah. That's good for food for thought. Vicki Dutton, welcome to the conversation. I'm just going to read her stuff here quickly. The only way to hold value in ag is profitability. The lack of a proactive farm voice and influence is evident by the China EV tariff. That's a tough one. And the anti-U.S. relationship by Ottawa, manifested in logistics that create the environment. Nutrient went south because export from Canada is both costly and unreliable, including basis, freight rates, and carbon tax included. The cost of commodities on a vessel, over $110 per metric ton, which is a locally and globally unsustainable charge. My soapbox remains, we needed a strategic, influential farm lobby. For example, farm credits at $135 per metric ton would be an excellent source of off-farm income and provincial revenue source. Quebec cap and trade is worth millions. Here, regulation denies.
Yeah, that's getting a little complicated and a little too many
okay
points on it.
Fair. I'll just leave that there then. We're
Well,
going to try and
I
you
can
have
answer it.
you want to?
Just to some degree, but the trade issues, or I don't want to have you repeat it. It's pretty long. Uh, but the trade issues ultimately will be resolved mostly by supply and demand. If the rest of the world doesn't produce, and you produce, we we are amongst the most efficient. I disagree with that other part that we're not reliable. We're amongst the most reliable trading partners as far as our products are concerned and quality is concerned.
And to be fair, Vicky has corrected me on carbon credits. She's saying not a luxury, Dan, found value. Quebec revenue in cap and trade is over $1 billion. So I stand corrected. If there's a huge opportunity, I'm very curious. I'm carbon curious, and we'll be having more conversations about it in the future. I know we've been in contact with Continuum Ag, with Deborah on there, and my brother's been scratching his noggin about it a lot. Larry Hillworth, oh man, this is going to be a good one. So lots of great dialogue. Being an old ag banker that dealt with many farm debt review board meetings and farm resolves, being an ex-machinery dealer for many years and a farm advisor, yes, the impact of LTV balance sheet appreciation because of inflated land values masks perhaps some operating inefficiencies. With these gray hairs or lack of them, LOL, I might suggest rather than looking at LTV today, given market issues, my advice is for farms to watch their current ratio in terms debt to equity ratio. Current ratio is a telling ratio for continuance and success. And yes, even as an ex-iron dealer, watch your purchases. Nice to have fancy new iron. That's, I mean, obviously the iron and the tin and all that stuff is farmers love that, but nice to have fancy new iron. Make sure it's needed and affordable. As a dealer, I wanted customers for the next 20 years, not the next combine purchase. As an ex-banker, I echo the comments. Communicate, communicate, communicate. Have a plan. Bankers don't like surprises. I think that was in your notes. Yeah. Absolutely. That's one thing bankers do not like is a surprise. Jumping out of a cake at them. Bankers don't like surprises and they choose their course of action differently if you go silent on them. So you were making that point, Robert.
Sign on a wall if you go silent on them. That again, you're keeping information from him doing the job and promoting you to at the next level, so they can either approve an extension or improve the terms or do something. You need that communication. It's an absolute necessity. And like I said before, he's like a partner to you. They are partners. I treat them as partners, and you have to give him the courtesy of showing him all the numbers, show if there's some problem areas, show him how you're going to correct those areas, even if it means sale of some few quarters or some, what is it to sell? That's another thing, the lenders, they're strictly focused on cash flow, income. They don't look at the what equity you built in your land and so on. But how hard is it to sell some that I bought at 500 and sell it at 4,500 now? It's a no-brainer, but they don't give you that credit that you can cover that and make a payment for that. They go strictly go on cash flow. I don't give a. I look at the whole damn picture.
Well, Larry's been a banker and an equipment dealer, and now he's farming. So he would know. And we're getting very, very close to the end of the questions here, folks. But a couple quick ones to wrap it up. And I just wanted to touch on what Keenan Amy said again, because he wanted to add a little bit more. I think, and this is a big pain point, Robert. From the farmer perspective, margins are tightening, and yet landlords, they want more money based on land value. Do you think the land rent will continue to go up based on values of land, or will rents go back to more productive value percentage, therefore driving land rents decreasing because outputs looks like they will be depressed? I think your fundamental argument is it never made sense, probably never will, just to varying degrees.
Well, that's the base of it, of all of it. Never did make sense, and then it won't in the future. When I was talking to guys when rents were at $60 and I was asking 65 for the next renewal, oh, that was too much. Then the question came up, well, where do you think they're going to be a few years from now, 5 years from now? And I said, well, being close to 100. Oh, he nearly fainted. But what are they today? 100 is a kind of starting
Mm.
off point.
Yep,
So
we've been through
they
that.
will
Yeah, I
go
remember
up.
that. uh, does Robert invite his lenders out to see the equipment and land purchases to help foster this relationship with them, to help them see his vision? Christy Friesen, great question.
Yes, I've had quite a few Toronto bankers fly in, take a tour with me, look at it, and just be amazed by Saskatchewan, the size of the farms, the equipment, and everything else. That's like I've been doing my homework on behalf of all the producers. You get these guys on side, they feel much closer to you, they feel much better about the industry and everything else. And yeah, and they are starting to understand it much better. I've had a number of them come. As a matter of fact, I have one coming in February now, of the major fund.
Bring him to Convergence. Dallas Monio is saying, when you were back in South Saskatchewan, Robert, I could use a steak. So it sounds like you have another date.
Yeah, he knows what my preference is.
How do you don't eat your steak well done, do you? You
A
have
good tenant, a good producer. Yeah, it's good.
Yeah.
There's actually a hell of a lot of good producers in Saskatchewan. I'd say majority, and that goes that everybody thinks, oh, we prefer only the large guys. There's guys that farm 1,000 acres that are as good as any up the scale. Doesn't matter what size.
Of course.
Uh, yeah, there's a
I
lot of
mean, one
them.
of the best farmers would be doing
And
a
a lot of good
hell of a
people out
job.
there. I do have my critics though.
Oh, I never knew. I never knew anybody who had criticized you for anything, Robert. This is news to me.
But they're getting less. Okay, let's.
Well, sure.
I don't mind criticism. Criticism sometimes helps you look at have a second look at yourself and say, well, maybe let's give them a benefit of doubt. What if? And what
If
can
nobody ever criticized you, what the hell would you be doing in life?
And then I look at it and maybe even alter things, change things if need be. But I'm good with it. Comes with the territory.
No, I love that about you, Robert. I appreciate that. It's inspiring. We should all care less what everybody else thinks and stick to our core values and our true thoughts. Steve Reimer, what's your thoughts, Robert, on difference in land qualities? Thinking also of production, top quality land priced record high versus lower quality land at a softer price. $1 million a quarter is hard to pencil out on the balance sheet. However, there is, of course, the difference in production year over year. As a young and hopefully expanding farmer, should I rather be holding out for the top quality record price land or working with the middle to poor quality land?
Yeah, it's a tough question because, okay, now let me ask you another question. How much A class, B class land is there in Saskatchewan? Okay,
Yeah.
very limited, very small percentage. So what choice do you have? If you're going to farm of any size, you can't just buy class A or class B. They doesn't hardly exist, class A anyway, very much. So you have to go into different classes, and different classes, different areas lend themselves. So like, let's say that area around Assiniboia. I have that big land base there, mostly chickpeas, lentils, durum, and the rest. And then I have the northern part uh, that caters more to canola and the other rotations. So and a lot of those soils, uh, you don't have much choice as far as the soil classes are concerned. There's areas in the province that have J and lower soils and that produce almost as well as the higher soil classes. I've asked a university professor on that ag university professor. about that, are we deteriorating soil? This was about 10 years ago when I first got into it. And I was concerned about that. We're deteriorating the soil and how long is it going to hold up and everything. He says, you don't need the soil. Soil's there just to hold up the plant. I said, well, what do you mean? And he said, well, think in terms of that aqua, or what's the word, phonics, that
Aqua, yeah, aqua. That's a good.
or is it
The
hydroponics?
hydroponics. Yeah.
Yeah. Think in terms of hydroponics, zero soil. So how does that grow so prolific? Yeah. So anyway, the
But
bottom
don't
line,
you like the middle to poor quality land? You're probably looking as an opportunity to improve from current state to a much higher production level. No, like with
well, you
drainage
can,
and
but it's a
clearing and
long process, and you have to survive that through your yields on it. Yes, you can improve all the land because what you have, what you need, you need organic matter and all the replacing all the nutrients that you take out. Don't mind the land, farm the land.
Do you see long-term issues with Indigenous land claims with what's currently happening in BC?
No, not really. I think different provinces have different issues.
Yeah. Any comments on Ontario land values? Does your mentality still apply when the land value is decoupled so much from the productivity? And it's been a theme over and over. It's never made sense, but maybe less so in Ontario.
Ontario is very different. Okay, big number one, it's open to global investors. Okay, that big, there's a lot more capital chasing it. Number two, a lot of it is for urban expansion and development land. It drives different price. That's got nothing to do with, even though it's maybe in a farming district, but there's more and more developments coming out that way, and you pay a premium for that. I made it a policy. I don't even look at land if it has a premium attached for development purposes.
So
So
you're not going to be going to Ontario and driving up land prices there, Robert?
yeah, I'll be chasing them though. Those guys are way too far ahead. Like what are they, 20, 30,000 an acre? Like a lot of those areas. But if you look where the movement, like where the world is going to concentrate on, where they're going to leave some areas or abandon some areas because they'll be forced and move. The Great Lakes area is the perfect area because it's got the water. Water is going to be the key. Land is important, yes, but without water, doesn't do much. And that goes for producers and production, crop production as well.
Yeah,
Water
Ken is
is
mentioning
maybe
that.
rainfall is more critical than the soil class.
Right. Yeah, that's going to be a more and more important thing in the future. And anybody who's a pickleball warrior down in Arizona.
And timely rainfall, not just anyone. You can get a foot of rain in September, won't do you a damn bit of, well, would be the opposite. But if you get that foot in the timely, when the crops need the rains, that's very different.
Yeah, and there's some talk about how supply management changes things too in Ontario. So,
well, that's mostly to do with that's what Trump hates about Canada is the supply management portion, and of course that's all tied to mostly to Quebec. So the Liberals are never going to let go of that. They're going to ruin the whole damn country before they'll let go of that because they'll lose their vote, of course.
well, we're not going to get into Donald Trump on the fourth hour here on the Growing the Future podcast today. I think that's a great place to leave it, unless anybody wants to go there. But man, what can I say? Let's bring this home. Maybe let's just go quickly around the room. I know it's late in the day already, but we got 10 minutes here before the top of the hour and be done at 3 hours. But like, I'd love to hear from the sponsors too. Any final thoughts, and who wants to jump in first as to just to, give their thoughts on the day and the conversation and all that good stuff. Yeah, Ryan, why don't you jump in?
Yeah. You can hear me all right?
Yeah,
I had to do
okay.
a switch of the headset here.
No, you're doing great.
So yeah, I guess just my closing thoughts. So kind of from my previous career hat, which was that of a tax partner in a national accounting firm. So I'm going to speak for a little bit on the behalf of the accountants here. Is Robert's point number one in his action plan, I think is one that as advisors to the producers, we really need to make sure that we take that seriously. And I mean, the producers also, it is a partnership between you and your advisors. And because I know many times it was an email or a call or a drop in from a client going, hey, I'm trying to buy land right now, right? And there was no proactivity and no, like, hey, I have plans on expanding my operation. Let's have a conversation about what we need to do to put me in the best position to be able to access that capital. So just wanted to kind of put a plug in there for the accountants. I do wear a little bit of a different hat now, being part of Core Wealth as a wealth management advisor, and just I guess wanted to thank you guys for allowing us to be on here. We are going to be at Convergence. And we are going to be working with Dan on a separate webinar. And so look forward to getting to know some of the people who are part of this great community and this great conversation. And I just wanted to, say thanks and appreciate everyone's questions. They really raised a lot of good points and incited a lot of good conversations today.
Oh, I appreciate that. And yeah, definitely. The accountants are a big part of this conversation and partners as well and everything that goes on the farm. So, and I'm really excited to continue to work with you. And we'll be like, as Ryan alluded to, we're going to be doing separate webinars to get the bigger picture, niche down, talk to all of these folks on the call to continue this conversation because it's been tremendous demand for it. Ted, did you want to give us your end of thoughts? How did you like the meeting? Scale of 1 to 10, anything to add?
Yeah, well, I mean, I'd give it a 10, of course. I think we have a great presenter here and a great host in yourself and a really pertinent topic. Some of my closing comments would just be about mindset. We're in some challenging times, but just remember that hard times create strong people and that there's opportunity in every single type of market out there. And I just don't want to see producers getting down on things because we're in tough times. So I just say, find the opportunity, maybe learn how to strengthen your balance sheet or tighten the belt a bit or become more financially literate and just look for those positives in this. It's not all bad here. And, the strong people will get stronger and make the best of these times.
That's a great message, Ted. And, yeah, it would be great to see you at Convergence as well. I think that's the kind of place where you get that in person, and there's a lot of like a big why and a lot of like cool emotions involved with being in a room like that of like-minded people that are really optimistic. So thanks for your involvement, Ted. That's awesome. And the Shepherds, thanks so much for attending, getting to know you guys a little bit more through this opportunity. It's wonderful to have you, father and son team. So what did you think, scale of 1 to 10, and anything else we could have done differently or better? Or do you have any suggestions?
Just a fantastic morning for sure. Just hats off to you for doing a great job and always great to hear Robert. We've known Robert for almost 15 years, pretty much the whole time we've been in the real estate business. And we've learned a lot from him. He's been a coach, a mentor. We've worked together, property management. He's just been a great guy to have in the industry and a great morning for sure. And we're very optimistic about the future of ag in Saskatchewan and Western Canada. It has its challenges, always has. I've been around for a while. We've seen challenges in the 80s and 90s and 2000s, and there's challenging times ahead. But it seems like the industry is really resilient, and there's great people in it, and we're extremely optimistic about it, as well as our real estate business and our own farm and our land ownership. So it's all very good. So.
Good. Well, we'll be looking forward to continuing the conversation with you folks. And No, I really appreciate you coming, and you're going to be at the Convergence conference as well.
Yeah, I'm looking forward to it. Yeah.
Yeah, it's going to be great. It's coming up super quick. Tim, you want to bring this thing home? Scale 1 to 10. How do we do? What did you like? What?
Yeah. Excellent. Scale of 1 to 10. It's a great conversation, one that, hasn't been had before. So I really appreciate Robert's perspective, where he's coming from on such a high macro level and bringing it down to the micro level. I also found it really interesting, the tension. There's a little bit of tension between what Robert is saying the banking industry is going to do and what the lending industry is saying they are doing. And I think it's really kind of cool because I've been through hard times before and it was way worse than it is right now. And to have these kind of conversations right now and to troubleshoot things and to be open to different types of solutions, I just think we're much better prepared this time to go through hard times if we're going to go through hard times. So anyways, I'm super grateful for the opportunity to be here and participate, Dan. So thanks.
Yeah, and I'm glad that you brought that up too, Tim. That's a really good point. And that's what I thought was really functional and productive about this. Yeah, it's a little bit of some touchy subjects, but the conversation was respectful. I know you don't always get that online, Robert, but the conversation was really respectful and productive, and we should be able to talk about this stuff as fully grown adults, fully formed adults, and that's how we make progress. It's been a great debate, and I appreciate Scotiabank stepping up and being a part of the conversation because obviously, they need a voice at the table. Everybody needs to be at the table. It should not fair that they should be in absence. The banking industry should be in absence in this conversation not to defend their position, and they maintain it's more or less open for business. Let's rock and roll. So, but check with your banker, know how to talk to them, get your ducks in a row. It's all good advice. I got to take this advice myself. Robert, thank you. You are an awesome friend, an awesome mentor. I feel so fortunate to have had you on the podcast and got all your wisdom. I wish I took more of your advice in life, but it's just been a wonderful experience to get to know you in the last couple of years and spend time together, like off the record or whatever. It's been great. And then the opportunity to do this, for the agriculture community. I mean, you did incredible today, like 3 hours of sharing your wisdom. You're not getting any money out of this and you've often been a target. But I hope through these conversations that people can understand you better and your intentions and we can all work together for the greater good. That's my hope.
Okay, well, I guess if I can add something.
You can talk now, Robert. Yeah,
I'm very encouraged by the response I had from the 20 or more lenders. Yes, they are very different, and yes, you will get some different views, and they have different requirements. But all these, everything I talked about today, I have on paper, like on the term sheets and on the proposals and everything else. So there's nothing out of ordinary there or something that they have different specifications, different needs. But I'm very, very encouraged by the response from Toronto, the head guys that are very enthusiastic about the ag industry. And that's a base to build on. If we just do our part, we're the best damn industry there is. Going forward, and I'm sure crop prices will increase, and there will be more profit margin down the road.
On that note,
good luck to everybody in 2026. Have a great crop year.
On that note, it is the top of the hour at 12 noon here in Saskatchewan, Manitoba. Right on the button. Doesn't get much better in pickleball or curling or whatever, right on the nose. So 3 hours on the nose. So thanks, everybody. I really appreciated it. Check out the Growing the Future Mastermind. Talk to the sponsors. Come to Convergence. We'll continue the conversation. Thanks so much. Well, folks, that concludes part 3 and this 3-part conversation with Robert Andjelic on the capital dynamics shaping agriculture and the broader economy. Across these sessions, we covered the macro risks facing the system, what producers should actually do next, and the real questions people are asking as Capital Titans. If you found this series valuable, please give us a thumbs up, subscribe to Growing the Future Productions, and turn on notifications. It helps us continue hosting thoughtful, long-form conversations like this in the future. You can find all 3 parts linked in the comments, so you can revisit the full discussion anytime. I know some folks are watching this a number of times to try and glean more information. Thank you for watching, and we'll see you in the next conversation.